Hey everyone, welcome to Breakout Wednesday for the 31st of August 2022. It's about 3:30 p.m. on the West Coast, 5:30 p.m. on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. We're in a hard market. Chopped some big down days over the last week, chopping sideways. We are in what Mark Minervini refers to as a hard penny market, and making money as a traditional breakout trader in a market like this is tough. Okay. Now, I've talked about dozens of times over the last 2 and a bit years about never hold in a stock into earnings. I had a note from a guy on Twitter about the GRR trade that earnings was coming out on the 30th. I've said it so many times. I never hold anything into earnings. Okay, I'm lucky I didn't get stuck in this GRR trade on earnings day, but I certainly have been stuck in many like that. Okay, over the years, with some decent positions on. There's been a few times when I've wanted to vomit in the corner and curl up under my bed. For those who got caught in it, let it be a lesson, if you haven't learned it already, that holding into earnings, if you are a short-term momentum trader, swing trader, whatever, it's like legit degenerate gambling. And because it doesn't matter what's happening in the trend and the breakout, there's just so much going on that we are living in a world where there's I do not believe that the market knows what's happening in that earnings report before it came out. Okay, I think that people who use that as an excuse it's probably a bit outdated. This was a surprise to the downside, obviously, and I've talked about it so much before. I don't want to repeat myself and bore people that have been listening to this for years, but surprises to the downside always overshoot surprises to the upside. Okay, and I just feel that those who argue that you should hold into earnings because it's in an uptrend and it's probably going to gap up, I mean, that's a load of bullshit. And the gap ups tend to be less of a move than the gap downs, just due to obvious reasons, right? And so I just tend to find net holding into earnings, unless it's a super long-term investment, just gonna get me just absolutely annihilated more often than it gives me like complete home runs. Okay, and so GRR, for those who held into it, it's a lesson to be learned, and hopefully you're getting out the day of this break, which is pretty much right after open, okay, on this day, okay, which your loss would be minimal. But it's for those who kind of just don't have a plan, and they wake up and they get home from work that day and this thing's closed at 98 or whatever, and then it's down again the next day to 86, and they were in at 133. It's enough to blow up an account if your position sizing isn't good. Okay, and you kind of go in heavy. So anyway, earnings, they are ruthless, and that's enough on that. The other thing before I move on is that I struggle to locate earnings dates, and it's usually the very last thing I do before a trade order goes in, is I'm trying to figure out the actual earnings date. Okay, and so I do not, when I find setups here, I don't usually know their earnings dates yet. That's something I'm figuring out when the order's going in. Sometimes when even the order gets triggered, it fears me into doing a bunch of research, figuring out their exact earnings date. Okay, so that's for everyone to deal with. Now, just a few charts, because we're in a market where it is hard to find really nice bases. Okay, and so I'm just, out of interest's sake, there's a few little stocks I want to talk about. CXO, there's no clear pattern there. I mean, I could make a pattern out of this, but I don't want to. I don't want it that badly, but it's interesting. A lot of these lithium stocks are holding up so well, hey? And that's really all I wanted to say about that. COI broke out at a big base this week. really kind of classic pattern. It was one of, the only ones that really did. So COI, and then, there are a few setups emerging, like EMR, which stock we've traded a few times, and you can zoom out, but it is just forming a super tight range with pretty good risk reward. A lot of green candles here, hey, and so EMR is interesting, and then NEU, okay, is just tightening. To me, it's just, I need that to have a few bars where it does pretty much nothing, like this bar here, and these bars here, like this bar here on the 13th of July. Like, I need it 1 or 2 days like that in order for me in this sort of market to have the confidence to whack an order in for a breakout. Okay, I don't like these ranging wicks, even though they're not that big a range, but to me it's just, let's just chill, and just, I'm willing to let that trade go without me, unless it tightens up like here, the 12th, 11th, 12th, 13th, 14th of July. I need that sort of VCP in this sort of market to have the confidence to whack an order in, okay? That's it. I wanted to quickly just talk about GCY, how, I was saying I was going to leave it because I hadn't based for long enough. It certainly had a powerful breakout, didn't it? So that could have been an amazing scalp, but I missed that, and that's that. And they're the only trades, CXO, COI, EMR, NEU, that I really wanted to talk about. There's just not much, and part of the ability of being a profitable trader is just learning when to do nothing. And so I just have no problem with just chilling out and doing jack shit until high probability things come my way, and then I'll jump on them. Okay, I had a question from Maria this week about what to do when you're working full time. How do you kind of let these trades run? Whereas the question exactly was who work full time and they need to slim down the pick-ins and figure out how to let winners run and not take them too early. Okay, look, I mean, I could go through that all over again. I think the first thing to differentiate is what sort of market we're in. Okay, because what I do really, it depends on the market. Like, this is not March, and this is not April 2020, in the sense that we do not have all these stocks setting up in beautiful bases, right? Just and so we are in kind of a correcting market, a sideways market. There's some pretty explosive rallies out of it, which if you catch, you can do super well. But there's also some vicious downtrends, okay, where if you get caught in it, and then with a kind of 100% invested at the top of one of these declines, you can absolutely annihilate your account. And so I think the first thing is to figure out what sort of market we're in, and it's pretty clear that we're not in a raging bull market. Okay, if we were in a raging bull market, then I've done some talks like go back and listen to Davis Box Trade Investing for capturing major trends. I think for people who work full time, it's just such a powerful way to trade and invest. And then the other one was this one here, trailing stop losses for high growth momentum stocks. Okay, it's not a Breakout Wednesday episode; it's just an extra episode I did. I think this one here is probably the best video I think that I've ever published. And it has hardly had any views, compared to some of the others. And I think that for a full-on bull market, this is how you stay with trends. And I would argue that when we're in a massive bull market, working full-time is an advantage, okay? Because if for most humans, if they're all the noise and stuff, they're just going to stuff up and start scalping and selling too early. And really what you want to do is just stick with the huge move in winning trades, okay? But I have to admit, in a market like we are in today, it's super hard to be working full time this very second and then hoping to catch big swing trades, because there's just not as many great ones around. I mean, if you're lucky enough to catch stuff like DRE, that's great, but that's been obviously the exception. There haven't been that many trades as good as DRE around, have there? So there's been a few, but not that many. And so I think in this sort of market, I'm setting profit targets. I'm more scalping. I'm being much more selective. I'm pretty much sitting with big cash positions. I'm happy to not take any trades unless absolute pearlers come along. Yeah, and that's it. I hope that helps. But, you know, instead of going over it again, you know, I've already made videos. I reckon go back, listen to those, see if they help. If not, let me know. That's it. Pretty short and sharp. There are some good setups out there, but really only 4 that I think are worthwhile of chatting about, and some of those actually need work before they're actually set up. Cheers, everyone. Bye.